That's Fiserv, just FYI. I'm from Omaha, actually, so I'm local. I'm a season ticket holder. My daughter was in the marching band. I have all the connections. I live in Omaha, and we have about 5,000 associates, actually, in Nebraska for Fiserv. In the last year or year to date, we've hired about 100 interns and analysts, so we always like to source from the university. So I'm happy to be here. My role is that I help innovate the software that financial institutions use to fight fraud, but we also manage fraud for financial institutions. So a lot of community banks and credit unions don't have the staff or the ability to fight fraud on their own. So I have a team of people that service that. So thank you.
And Mr. Damir.
Hi, everybody. To give a little bit of background on Plaid, Plaid is a network that enables primarily consumers to share their financial data and their financial profile for a myriad of use cases. That runs the gamut from initiating payments to establishing in a financial management application all of your different accounts and liabilities, investments, all the way to use cases like applying for loans. Over 1 in 2 Americans have connected accounts and shared their profiles throughout America, and over 100 million users are in our network as well. In terms of what I focus on all day, I've been in the payments industry 15 plus years, so I mostly think about payments and how to enable payments, and then obviously how to prevent fraud in payment flows.
Okay, thank you very much. Mr. Zavala, we are going to start with you. What processes does Citibank have in place to detect suspicious transactions? How does a bank respond to potentially suspicious transaction on behalf of a customer?
Yeah, so when you think about a suspicious transaction, we're thinking about how are you accessing the account, or how is the account being accessed? How is it normally accessed? What are you trying to do? Are you moving money? Are you making an address change? Are you changing an email, updating a cell phone number? And then if you're moving money, what's the destination? So we're looking at it end-to-end holistically. What's the risk of how the account's being accessed, what you're trying to do, and where the money's going? We put all that into a number of different systems to try and capture what's normal for you, what's abnormal, what would be an anomaly, and then depending on how the client is set up, will determine our outreach process. So if you were set up to the mobile app and you're biometric, we may push you a message that says, you know, Kathleen, do you really want to send $10,000 to Chris, right? Yes or no? If you're not set up on the mobile app, but you've got a cell phone on file and we know that's good, we might reach out to you with a one-time passcode to verify your authenticity. So there's a number of different ways we can reach out, a number of different tools and capabilities we have, but it really is making sure we're looking at that end-to-end holistically, from the time you access the account to where the money is going, to determine whether or not there's any level of risk, not just fraud, but could the client be a victim of scam as well.
Thank you very much. Mr. Tonia, has there been a noticeable increase in check fraud specifically over the last few years? You have a product called Check Fraud Defender. Can you explain that?
Sure, absolutely. So, yes, we write checks much less frequently. So the volume of checks have come down as we've spent more digitally, but the dollar amount of checks has gone up, and it's really more of a criminal activity that we see. Just to educate you on a couple of terms, it's not anymore just mail theft. In years past, it's been intercepting mail, getting checks out of the mail, trying to wash those checks using common bleach so that they can reprint the who the check is being paid to, or even the dollar amount. But that's very one and done, not scaled. And with the evolution of AI, we've had a lot of conversations about AI this morning. I'm sure in the fraud space we're going to talk about it a lot more, but they can really scale their attacks by cooking checks. So it's taking images of checks and then digitally enhancing them to repurpose them at scale. And so it's definitely been a growing problem. So Fiserv has created this solution called Check Fraud Defender, again, leveraging AI to identify like 26 different characteristics of a check. We have a truth database that we use to understand what is good versus what is bad. It could be based on past checks that individual has written compared to current checks or other. It checks borders, handwriting, you name it. So, but it's also a database and a consortium, so we can share data across the vast volume that we see and find it much more automated and much more accurately. And so that's been good for us. I would say at Fiserv we also have a lot of other check solutions, telecheck, a lot of payee validation services, but that is one that is new.
Okay, thank you. Ms. Conroy. So sometimes scammers will use a phone call to coach a victim through the process of transferring their money out of their account to the perpetrator. Can you explain your scam signal, how it works, and how the telecommunications combines with banking?
Of course, yeah. The phone call method of coaching and getting the person to get across that finish line is one of the toughest things. As I've talked to banks over so many years, getting that person to believe that they are being scammed is one of the hardest things to do. So we have connected with the MNO networks, the mobile network operators in many countries to understand, is there a call-in process? And is this person trying to transfer money as there is a cell phone call in process? And we've seen amazing results. The UK was our first market that we did this, and we saw a 40% reduction in the scams. So, the scam problem is, one of my former colleagues calls it the scampocalypse, because it is such an issue. And so the ability to get somebody off that edge in real time is huge.
40% reduction is incredible, and it's just, you've really just started this process.
We're in 12 countries with it right now.
Very cool. Very cool. Thank you. Mr. Damir, Plaid is a data network powering the digital financial ecosystem. With the increase in the AI-driven fraud, what role does network intelligence play in fighting fraud today, and how is Plaid applying its network?
Good question, and maybe it's good to start with an understanding of what does it mean to be a network, because then we can talk about what is the utility of that. And I'm not the only network on stage here, but we are a two-sided network. On one side are financial institutions, of which we connect to effectively all of them in the United States, and on the other side there are applications, brands, companies, and their consumers. Right? So when you look at that, then we are the player in the middle that has one holistic picture of all of the behavior across both good users and fraudsters, right? So then it becomes a question of how do you then use that position for good and for fraud prevention, right? One very effective thing is we see billions of devices, right? So it's not just the accounts, the identities, and the transactions, but also the devices that are being leveraged. And when you take all of that data together, you're able to really have an understanding of what are the overarching trends across institutions and across users. I think the thing that probably gets under-discussed is that there's just as much utility in understanding a good user and making sure they continue to have a good experience and not have what we call in the industry a false positive when your transaction is flagged or blocked or something like that. That has just as much utility, right? And something that might look a little bit strange to one person, which is like, oh, I've never seen this user before, I've never seen them transact, but we as a network have seen them do that across other customers, other companies. That allows the good user to continue to have a great experience. And then fighting fraudsters is basically the inverse, right? Which is, we've seen this fraudster before, we've seen this trend, we've seen this device, and even though it's the first time that they've targeted a particular company or an entity, we're able to identify that using our network signals.
Very impressive. Thank you. Okay, this is for Mr. Zavala and Ms. Ratonia. Can each of you speak in some detail regarding card fraud in particular? How does Citibank and Fiserv work to combat fraud using credit cards and debit cards?
Want me to go? Okay, great. So when you think about, I asked you all if you've spent in the last couple of days, and when you're dipping, tapping, or swiping, you expect to get an approval. You have the funds. And so we have to constantly make sure that we're understanding what is normal or good behavior versus bad. And so most often it's really trying to make sure that the good gets through while the bad is prevented, and striking that balance, because you lose trust with your bank or your financial institution if we don't. So to do that, Chris talked a little bit about this already, but we leverage fraud scoring, we leverage FICO fraud scoring is one of the scores that we leverage. They have adaptive analytics. We leverage adaptive analytics. So we do a lot of things together as well. But I think one of the panelists this morning was talking about how fast things happen and all the things that we're looking at. We're looking at you as a consumer and what is typical spend for you compared to what is typical for that merchant, compared to what's happening in the dark web and is your card being sold in the dark web, compared to just all sorts of hundreds of characteristics. But all you did was tap, and you got maybe a little bit impatient when it took 5 seconds to get a response, right? But we have to do it within milliseconds. All of that is quickly done. And so we're doing that from a technology perspective. And then, Chris will talk a bit about his processes. He has a team, a large team that does it, sophisticated, using software that they've procured. As I mentioned before, we do it also on behalf of community banks and credit unions, about 3,000 of them, so that we're fighting fraud for them through processes where we're looking for fraud and writing
that looks real, but then we could actually use the iPhone camera and its depth cameras to do a liveness check right then and there in the application, and that's a very difficult thing for a fraudster to get around. So it's not all doom and gloom. We can use the tools against them as well.
Are there any other tools that you guys have that you're using against the fraudsters?
Yeah, very similar. The liveness checks, absolutely. We've got a lot of tools that look at what device are you using to access it, not just the IP, but the device. Is it a consistent device? And if we see a device accessing account by a fraudster, we know that's a bad guy. So we can lock that down and restrict the capabilities there. And then behavioral capabilities as well. So how do you normally use your device? Are you know, is somebody, copying and pasting in your profile, right? Are they, doing things, that a normal customer wouldn't do? Or if we're asking you your date of birth, is it taking you a minute and a half to answer that type of question? So using those type of tools and capabilities to really determine when it's truly the customer, when there may be something nefarious going on in the background.
Yeah, and I think it's also the confluence of the analytics around everything that Chris just said. So looking at the holistic behavior of this person across all of the interactions, looking at that digital metadata, and does this make sense?
Thank you. Okay, so all of you employees of your respective companies, you're all fraud experts, but you're also consumers with your own assets and your own things. Number one, what do you do to prevent fraud? Number two, have you ever been taken, Warren Buffett said he would have said yes. Has there ever been something that came across your screens that you thought, oh, well, sure.
I'll start. So when I have friends and family reaching out, the first thing I tell them to do is freeze your credit. Just, make sure that if you do not need to have a new need for credit soon, freeze it. And it's less than a day to unfreeze it. That said, I've had my credit frozen for over 10 years, and it doesn't solve everything. So when there was all that entitlement fraud that happened during COVID, somebody filed for unemployment using my identity. And that took more than a minute to unravel. So just, stay on top of all that stuff.
Thank you.
And I would say as I bank, or I'm trying to go digital, right, as much as you can on your phone, download the apps, engage biometrically, very secure. The banks will then get to know that you are engaged biometrically, and then anything that's outside of that will look anomalous. As you get text messages or emails, don't click anything. Like, if you're not expecting it, unless you're on the phone with your insurance company, they're saying, I'm sending you a PDF, there's no reason to open it. You get a link that says, hey, your Amazon order credit is here, click it, don't click it. Toll tags, right? The tolls that are coming through. Every one of those things is 99% of the time is a fraud. So never click the links, never engage, never open PDFs, malware, fraud, and not that it's, I'm not trying to scare everybody, but I'm trying to scare you too. But yeah, don't click anything. Yeah,
the newest thing is the headhunters that are all using Gmails. None of that is real.
Flattery, but so it's funny, I have a 25-year-old daughter, and she often gets parking tickets, so we always stop and question, could this be real? Because my husband's still under title for whatever reason. But anyway, I had the same issue during the pandemic with unemployment being filed, so that was a battle. But I always just say, this is the when you're in the fraud space, I think sometimes you are a little bit like, trust no one. But always question, just always have that curiosity. It's too good to be true, just like your parents told you. I second the digital access, just setting up alerts. Most financial institutions offer those. And then just two other things. We talked about Facebook being where most scams start. Even if you see those quizzes where they want to know what your dog's first initial is, and they're just fishing for information. As Chris mentioned, they're putting together a dossier of all the data they can get on you so that they can get to your passwords or get to the data that they need. So tell your friends, don't answer those quizzes on Facebook. And then I think the last thing is just having a safe word with your family, because there are situations where grandparents are called by their grandchildren in a frantic moment of need, and grandparents will fall for it. So my mom has a word. And if anyone in our family calls urgently needing something, money, help, whatever, if that word is not said, I don't care how emotional she gets, she's to hang up. And so I think that really is the simple, brutal way to handle it.
I promise us fraud people are fun at parties, don't worry. Number one advice that I would have is good password management. I am a giant fraud nerd, so I actually sign up for every website with an individual new email address so that I can see where my data is going over time. And I actually see, there was a data breach I was in 8 years ago or something like that, and fraudsters are continually trying to use those credentials every single month on something new, because I'll get an email in that unique email address. And that all comes down to how secure are your passwords. And the only thing that I'll highlight is we're going through a very transformative moment in terms of how authentication works. There's a new technology called passkeys that you all might start seeing depending on the platform that you're at, and that's moving away from passwords and having your credentials secured on your device and then using biometrics. Much like how there will be a day in which there's no longer 16 digits on your card number that can get stolen, there will be a day in the future in which a password can't be stolen, and it's this sort of technology, and I think we all have a responsibility as an industry and as an ecosystem to start adopting these newer technologies that are inherently more secure.
Okay, thank you. So PayPal does not want to give me money. Okay.
No.
Okay, so for all of you, what do you think some of the biggest financial fraud and scam risks that don't get sufficient attention? Because we see, we read the media, we say don't click on a button. What are some things that we just might not know about, like the surveys? Didn't even think about that, but those cute little quizzes that everybody wants to, because they're fun and you talk to your friends about them, but they're grabbing information.
Yeah, I think I'll just start, but I'm out of order now. But I think it's just that as we've shored up with technology, with chips in the cards, we've done so much to make more secure the transaction. The human becomes the weakest link, and so you talked about Scamopolis. I call it the scamdemic that proliferated during the pandemic. The human is the weakest link, and so when we think about, you can't educate enough. We have to hear things 50 times so it really sticks. We've all traveled. We fly on planes. You know that seatbelt has to be low and tight across your hips, and you know that you have to keep things out of the aisle. You have to just keep repeating the same mantra, even though no one's listening to the attendant as they're reciting that story to you. So I think it's just repetition in messaging in your mobile banking sites if you're a banker or a credit union, and in social media, just wherever your consumers are.
Yeah, I'll say we haven't touched on this a lot, but the other thing that we're seeing a lot of is fraudulent merchant storefronts getting stood up. Because again, with AI, super easy to do. And it's, small business fraud has been such a thing for so long. So it's, that's a thing globally we are seeing all over the place.
So they're standing up a storefront using AI to create everything to look good, grab everybody's data and never send you the stuff, never follow through, or
yes,
just stealing your information?
Or use stolen credit cards, process them through that storefront. So there's a ton of ways that you can do a lot of fraud with a fraudulent small business.
Yeah, and I would say just the number and different ways that scams are occurring. So not to plug this, but I'm going to plug it. So if you go to citi.com, CITI.com/fraud prevention, we try to keep a list of all the different types of scams and educate, and there's like 21 different types of scams that we have on there, how to protect yourself, different fraud tools you can have. The number of scams is obviously growing, and the difference in the scams is mind-numbing at times. I think what we've seen recently is the focus on elders, like elder scams, as Charlotte was talking about. So I think there's got to be a lot more education, not just about the scams, teaching digital as well, right? Because that's one of the gaps now. You've got a lot of clients who are used to, I'm just going to pick up the phone and tell my banker what to do. I don't need to log in. They're the most exposed because then somebody might register online as them and get access to their own because they haven't done that. So I think educating on how to use it, what the most safe and secure methods are, but also ensuring that there is this awareness of the different types of scams that can happen as well. The grandchild scam is a perfect example, because they want to help and oftentimes lose a lot of money that way.
There's also a growing trend of what we call first-party fraud. I think the majority of what we've talked about today is what we would call third-party fraud, some nefarious third-party actor elsewhere, oftentimes in another country, pretending to be someone else. But there's actually just as much fraud happening from the person who is who they say they are. Very simple example would be return abuse, right? Where you keep buying a bunch of stuff, you don't intend on using any of it, and you return. That's a big problem for retailers. Or you have people who will sign up for multiple cash advances with no intent on paying them back, right? And that's where the same exact sort of network capabilities we all focus on to find fraudsters can also be used here. And I think there's been a shift in societal norms around people's feeling of responsibility towards commerce, and that's why there's an upward swing in this overall sort of trend that we're all focusing on.
Or maybe you lost a prediction market bet.
Perhaps,
now
yes.
you didn't get the goods you want that were delivered. Yeah, just to bring it together.
Yeah, it's a great point. There's another YouTube thing. There's training videos that teach people how to do first-party fraud out there, and there's no consequences, which is awful.
So that kind of leads me into my final question. Are there changes to regulations or laws that would help prevent more financial fraud and scams?
Yeah, so I would say what they call anti-spoofing, where I can call somebody and put Julie's number on there and Julie's name on there. Like, we got to take a look at that from an industry standpoint and a U.S. standpoint. There's no legitimate purpose that anybody can think of for an individual to do that. Company, yes. Individual, no. And I think driving requirements on these companies who are, I'm going to say, making money from nefarious activity, right? If you're a search engine, you're making ad money from the bad guys posting ads. If you're a telecommunications company, you're trying to sell the banks and insurance companies tools to go out and identify anti-spoofing instead of just shutting it down. And then the social media companies who are making money because I've got 10 different profiles, I can sell more ads, where you should know that a lot of that is nefarious and bad. So I think there got to be some requirements there for them to ultimately do the right thing and maybe lose a little bit on the revenue line.
Yeah, on the scams front, we need to copy and paste what Australia did. They are absolutely on the forefront and requiring social media and telecoms to get involved in fighting it. That it's super important.
I'll just make a broader point that I think across a lot of legislation and regulations, the more we can have the ability to use this data to fight fraud, the better. Thankfully, I think most regulations and legislation come from that standpoint of, like, fraud is a thing that we all want to focus on, and therefore things like secondary data usage and things like that are generally permissible. And I think just continuing that trend line of making sure that we have an open data ecosystem that enables technology providers like us to protect consumers and businesses.
Yeah, I agree with that one. And I think just, again, more generally speaking, is just avoid creating friction that limits the financial institution's ability to protect the consumer, right? I think as Julie said, criminals don't have tech budgets, regulations. They can operate with, free will. They can just go fast. Just one example, we talked about check fraud. A bank has to clear a check in so much time. And they need time to validate that check's validity, right? And we've gotten much faster with solutions like Check Fraud Defender, but the bank has the time they have to meet, and they need the time to make the proper processes work. And so I think just always thinking about fraud clauses as you're writing regulations, or finding ways to carve that out and give a little bit more time to protect.
And one more thing, this is why this is so important, is Julie mentioned Australia, but it's not just Australia, right? You got a number of other countries, in Asia, they've already removed the ability for banks to send 6-digit one-time passcodes because bad guys were phishing them from clients or compromising them from borrowers. You have to do it through mobile push. In the UAE, if somebody's going to register for their online banking, you got to do a selfie, compare it to the photo in the governmental database to make it secure. The challenge, I'm not saying we should go that far, but the challenge with that is you think about EMV technology, the chip card. The U.S. was the last to adopt. We spent 6 years being exposed because the rest of the world moved. The rest of the world is moving on fraud and scam protections through regulation. We're still very behind and don't want to be in a situation where, again, for 5 to 7 years, the U.S. consumer is exposed because we haven't caught up with the rest of the world.
Because the criminals clearly know that.
Exactly.
They go right there. And that, I think, the point of what you said was that criminals don't have laws. Criminals ignore the laws and get to the money as fast as they possibly can. So we're going to open it up to the audience right now. Does anyone? It is Senator Tom Brandt who has a question. Wait for the microphone to come to you. So the question was, what percent of the people get caught with their criminal activity?
I would say, from my personal perspective, a low percentage, right? And there are some challenges here, right? So if you think about the bad guy sitting in Florida, the customer's got an account in California, the money's moving to Michigan, right? There's jurisdictional challenges that law enforcement has. Then you think about the load on the FBI and Secret Service, unless we can tie it to money moving offshore or terrorist financing, or it's a very large sum. It's difficult sometimes to get those cases pushed through. Now, I think things have gotten better over the last 6-7 years, but there are definitely challenges on the prosecution side, which is why we see, in many cases, these fraudsters continuing to perpetrate the activity because there aren't enough there isn't enough, focus on putting these guys away.
Yeah, the other thing is a lot of this is cross-border, so that adds to the jurisdictional thing. And then pretty consistently, and Chris will know this better than I, what I hear from banks is you've got to prove over $150,000 in losses to get law enforcement attention, which, that's a lot.
I was just going to echo the comment about the cross-border, making it even more difficult. And often the threat actors are operating from countries where they have more issues than perpetrating criminals that are prosecuting criminals that are perpetrating fraud in other countries. They have crimes against people to worry more about than financial crime. And so it does limit the ability or the focus on it, I guess I should say. But I know, Julie, you're also on the Noble board, and there's a lot of focus on that, just to put a little plug. But
Thank you. Yeah, because there's a lot of work to be done.
Thank you. Thank you, Senator Brandt. And way back there, hello.
Senator Cal, thank you. This really isn't a question as much as a shameless plug, and I'm okay with that. That's a redflag.com was developed by the Nebraska bankers this year to try and educate consumers, so that's a redflag.com. And secondly, last session we did introduce state-level legislation to try and deal with the spoofing issue, because I'm convinced that's really the biggest vulnerability at this point. That is one we were not able to get across the finish line. Don't be surprised to see that again. So the senators that are in the room, please look for that legislative proposal coming to a body near you very soon.
Can you tell me that website again?
That's a redflag.com.
That's a red flag. There we go. Thank you very much.
But don't put your username and password into it.
Other questions? Over here. Hold on, James. There you go.
Thank you. Sorry, James Wright with the Nebraska Credit Union Association. Our credit unions are doing a lot with very minimal resources to address the fraud. And given all the innovation that is being put in through state actors and other folks, can you explain a little bit about the systems that we're using here in the United States to help pay or cover the cost of our efforts, such as interchange?
Anyone? Is there someone in particular you want to pick on?
Fiserv, I'll let you answer.
Dang it. I wasn't sure I was following the question, so it was a little bit.
I think we use cost generators like interchange fees as part of the transactions that help cover their costs. So can you enlighten or help educate the rest of us on how those fees are important to beating paying the cost of fighting fraud.
Oh, I understand. Yeah. So interchange fees assessed via like networks and merchants pay, issuers do. But I think it just all goes to making sure that there's enough funding to fight fraud, right? To pay for those programs or to help innovate those programs. I can't speak probably any more closely than that, but I don't know if anybody else has thoughts around. Stay away from the interchange topic like others did this morning.
Good job, James. You stumped him. Thank you very much. Any other questions? Right over here. He is racing a microphone to you. He is.
Charlotte's probably quaking in her boots because she used to take care of me as a client. So, Chris Schuler with Centris Federal Credit Union. Hi, James. I would actually really like to know, just from your perspective, there is such a focus right now in fraud prevention in the card space, ACH space, check space, and we're all looking at AI. What role does it play? But what are you seeing? Because I know what I see from the traditional fraud. It's still happening. In some cases, it's making a comeback. And when I say traditional, I mean things like your $0 testing fraud, your enumeration fraud, the things that are really hard to explain to a member when, yep, you just happen to get caught up in this, and then they lose trust in us as their trusted financial partner because they believe we didn't do our job.
I can start, and we'll see if others have comments. But you're right. We call it either the balloon effect or whack-a-mole. Like as soon as you shore up one area, the criminals still have babies to feed, right? They're still going to perpetrate fraud. They move to another method, and sometimes it's bringing it back to old school, processes and methods, or sometimes it's those legacy ways of perpetrating fraud that are now amplified with the ability to scale with AI. And so when we think about, you were just mentioning enumeration attacks, that's where criminals are guessing, for anyone who's not in financial services, criminals are able to guess the account number. They're not just guessing, right? There's Mod 10 programs they can run, and they can get to account numbers, and they can start to guess expiration date, CB2, all the things that are authenticators. So I think it's just, constantly, that's what we do in the fraud space. We have to constantly stay on top of how it's evolving through looking at the data. Better to have a consortium of data, as was mentioned. I'm not sure what else to say about it.
Yeah, and I think the only thing we need to watch out for is that the way machine learning modeling works is that there's weights in the model that respond to the overarching trends, and you can actually have exactly what you talked about, which is the overarching trend is here in this type of fraud, and then all of a sudden the models will start reacting and saying, okay, I'm going to look less over here, and that is a bit the nature of the whack-a-mole of fraud prevention, right? And just making sure that we come at this from a balanced perspective and make sure that we don't forget these traditional attacks.
Okay, thank you very much to the panel. Let's have a round of applause. Our time is up. There's so many more questions. Thank you all for being here.
I don't believe I'm going to open an email ever again. It's great to be with you this afternoon. My name's Kelly Lammers. I have the privilege of serving as the director of the Nebraska Department of Banking and Finance, but actually I'm here to introduce the next speaker, Paul Neuner. Paul came to us about 6 years ago in the state of Nebraska. I, at that time, was also serving as the director of banking. A gentleman walks in, indicates that he wants to create a new kind of bank in the state of Nebraska, and knew banking isn't something that bank regulators are used to talking about. And we have all these questions about capital and how does money laundering work? And the comment was, we need to do this right. And I indicated, well, the regulation simply follows the law. You would need a law. And he mentions that he happens to work with the state senator, Flood, and he said, I believe there's an opportunity. So with that, it's one of those things that what happens when you put opportunity with the right geographic construct and you create a new business. So with that, our next speaker up is Mr. Paul Neuner, CEO of Telcoin Digital Asset Bank, our first digital asset bank in the state of Nebraska. Paul, I'm going to call you a Nebraskan by choice. So thank you. Looking forward to your comments.
Thank you very much. Thank you very much, Director Lammers, and thank you, Congressman Flood, for the invitation. Always enjoyed this from I think this is the fourth year, but as the Director mentioned, it's been about, I think the first meeting was March of 2020. Actually, we have a little timeline here, but again, my name is Paul Neuner. I'm the founder and CEO of Telcoin, which is the parent company of Telcoin Digital Asset Bank, which is a digital asset depository institution in the state of Nebraska. I think there were two things I want to accomplish with the talk. One is just kind of remind people of our journey and talk about where we are now and what's next. But then second, I think the most salient issue for us today is obviously the Genius and Clarity Act and how it relates to community banking and their outlook on stablecoins right now. So I think that's something that, you know, a lot of people are surprised to hear that we're actually on the side of the banks on most of these debates, mainly because our goal has been to figure out how to operate digital assets from within the system, within the banking system, as opposed to a lot of the initial players that really wanted to just disrupt and pull dollars out of the system. So, yes, it was March 2020. I remember it was Governor Ricketts' first or last meeting before his next meeting after us was the first CDC meeting. First time I had like fist pumped somebody, and that started all the lockdowns. And the journey for me is I called up Congressman Flood, and he was a state senator at the time, and had looked at the, basically we started our company originally in overseas, and because I had been working in Washington, D.C. and then overseas, it's a long story, but effectively most of the people that started digital asset companies at that time were scared of the United States. And you know, around the time when crypto was down for a while, if people are familiar with the history, I called up Congressman Flood and asked, you know, I think there's a real opportunity to figure out how to move and really embrace regulation in the United States and try to become a bank. And we looked at the Wyoming charter, and he said, forget that, come talk to Nebraska. So that's the origin of the company. So we helped draft the Nebraska Financial Innovation Act, very much in a cooperative manner with the Department of Banking, with the governor's office, with the Nebraska bankers. Again, from the beginning, I think comparing it to, say, other, like the Wyoming law in particular, I think, is that from the beginning, this one was crafted to figure out how a bank would get into this activity. Anyway, so long story short, we finally received, we were the first to apply for the charter well, I guess it took a few years after the law was passed to actually even be able to apply. And we received our charter end of last year, and we have finally turned on the bank just a couple months ago. So it was really a very long journey. I hope that what we're doing, or what we've done over the last 6 years, is creating something that is, once there is a lot of clarity in the industry, there will be a lot more investment that can come to Nebraska because of that. So that's definitely part of our goal. And the only other thing I'd like to point out is that there's absolutely no way that without Governor Pillen's support, without the Department of Banking support, and a team at the department that really made a strong effort to understand what we're doing, in a genuine, constructive manner, we would never gotten to the finish line. So just about a month ago, we're the first to connect a U.S. bank account number directly to an on-chain dollar, which is a milestone that we're very proud of. And we like to think of ourselves as a regulated bridge between the traditional banking system and public blockchain networks. And I will say that we're not FDIC insured. I think I need to point that out. But the institution is legally a bank, according to the Nebraska Bankers Act, and is eligible to apply for FDIC insurance. I think that a lot of what scares banks about stablecoins is the fact that they're issued by non-banks. And so that's something that I think once FDIC is able to really understand this, which they already are in terms of certain deposit tokens that banks have issued, and I think they'll figure out stablecoins and how to have pass through FDIC relatively soon. As a company, we just turned on just our retail product. We also are focused on partner API. Just means actually this year we're working with Battle Creek State Bank in Nebraska to set up all the basic infrastructure of the bank. But then from next year we really would expect a lot of the growth to come from us helping other banks do this in a turnkey manner, just following our API and being able to deploy digital assets. And when I say that, I mean a little bit, we're really focused on stable coins as opposed to, or I'd say digital cash as opposed to, and digital cash banking as opposed to like Bitcoin or others. We think of ourselves as a crypto bank, not in how do you, place to store your Bitcoin, but more how do you run banking on chain? Business accounts, obviously, and then bring your own wallet. In other words, there's a lot of, one of the positions I think we're in as an institution is the ability to connect in a regulated fashion consumers to decentralized finance. And so there are already a lot of popular DeFi wallets out there that users use around the world. Being able to connect that to a regulated banking rail, I think, is a great opportunity. I'm going to actually skip through these because, honestly, I don't want this to be about the company, but this one in particular I think we're excited about just because, I do think that there's a huge opportunity in all this with AI, not necessarily in the AI like deciding what to shop for you. Obviously, that's a huge innovation that was, or a huge value that was talked about earlier. But also, if you have a merchant and a user that AI can figure out that the consumer has some digital cash and the merchant has the ability to accept it, why can't they figure out how to settle that directly? So obviously, the more that we get towards direct peer-to-peer settlement, the better that is, I think, for consumers and merchants. Again, there's a lot of people that in most of the charters that you've seen out there are really more about effectively trust companies, like a place for you to
and better for consumers, and I think also better for regulators, more transparent, lower risk, by running some of these banking functions on chain. The rest of the talk, I'd really like to just focus on one issue, which is just the concept of stable coins as they exist today, and how the community bankers look at them. Because there's been some news out recently about how they're frightened that, and I think for very good reason, that the stable coins that exist today that are issued by non-banks are basically threatened to suck dollars out of the banking system. The more that if you're able to give a stablecoin reward or yield effectively for simply holding a stablecoin, those dollars are not able to be loaned out to somebody else, which is the fractional reserve lending, the banking system that really powers our economy. So there's a very valid concern. Our opinion of this is not that. It's basically just that instead of trying to block it, that they should engage in figuring out how to develop a more fit-for-purpose technology in bank-issued stablecoins that actually can operate within the system. just taking like a step back, I think one of the ways I like to think about this issue, and that's, if you look at the Genius Act, had a prohibition on effectively giving a yield for simply holding a stablecoin. Very quickly, the companies figured out workarounds by just having a third party circles the issuer, but Coinbase is giving you the reward, etc. And so part of one of the parts of the Clarity Act aims to tighten that down, effectively say that if it smells like bank yield, it's bank yield. And I think if you take a step back and understand, like as a government, why do we give yield in general? There's two different mandates.
Mandates, I think, are competing, which are important to it.
One is a fiscal policy mandate of the Treasury, which is obviously paying interest on government debt to fund budget deficits, right? Versus the Fed's monetary policy mandate, which is very different, is interest paid to banks to drive bank lending and economic growth. So two very different mandates that I think points presented was you effectively are tokenizing the Treasury, right? And so I think part of the access to Fed payment systems and yield from the Federal Reserve really should be predicated on participation in the banking system. Are you given a yield for dollars that are able to be rehypothecated, able to be lent to someone else, and effectively power economic growth?
So that's where I think a lot of the argument around this really is legitimate and means for concern. So this slide, I think I really just want to bring up, if you look at Bitcoin as cryptocurrency as Bitcoin, I mean, it's down, everyone's down on it. Trading has really shifted a lot to things like prediction markets. But that, if you look at this chart, that is not, the actual technology of crypto is taking off like crazy the past year. I actually like that Bitcoin's down because it takes a lot of the noise, the fraudulent noise, or just the negative viewpoints of crypto away, and really just allows us to focus on building. This is a chart about tokenized assets in particular. From just Genius Act and the contemplation or development of Clarity Act, you've had a huge investment in institutions in actually expanding crypto technology into pretty much all parts of the financial system. One of the things that we recognized as we were getting close to the charter is that I think there's been relatively little attention paid, though, to how banking itself can operate on-chain. And I think that's very much related to the concern that community bankers have. I just wanted to make 2 points here. One is that, our focus as an institution is on developing stablecoin technology that's fit for purpose for banking. Currently, the Digital Asset Depository Institution is only the issuer of EUSD. We do have other currencies. And I only mention that to say that I think one of the big opportunities here is that as we move into an internet of money, we should be in the center of that, right? And I think the institution that we've started here is for us, we look at it as the core. We also have subsidiaries in 15 countries, so we're licensed in about 10 or 11 of them and have others in process. But that's really what we want to create, is that the core of this Internet of Money business that we're running is this Nebraska Digital Asset Bank, but we're providing doorways to it all around the world. Right, so I think from this is just in that kind of, I'm going to nerd out a little bit here, I apologize, but so there's to me, the problem that faces regulators and banks looking at this is the narrow banking risk, where if you really only have payment stablecoins the way that they exist today, the more that people use it because they want to transact in a more efficient manner, right? But if that effectively pulls dollars out of the banking system, that's a negative, particularly for community banks. On the other side, you have the concept of a deposit token. I think the earliest, most prominent one was JP Morgan, the JPM coin, which unlike a payment stablecoin, which is issued on a public blockchain, typically deposit tokens are on more walled gardens, or they might be on public blockchains, but it's a permissioned network. You effectively can only transact with other customers of the bank. The problem that I see, or that we see, is that if you consider these as two separate concepts, you really miss an opportunity to, or you exacerbate the problem that community banks are worried about, because you drive all of the public digital dollars into payment stablecoins that cannot be rehypothecated or lent to anybody. Trying to, if you imagine if you were to really follow the letter of the Genius Act right now, the only way you can give legal yield is I give you, or I give the bank a payment stablecoin, they return a deposit token to me, which is an on-chain, basically an on-chain reference to my deposit with that institution. They've taken that USDC, converted to USD, and then loaned it to somebody else. And they're able to give you yield because they're able to, rehypothecate that. I think the problem with that is that when they're two separate contracts, it's very hard to have a seamless payment based on that. So we're focused on, in the next, or the kind of thesis around the patent filing is an embedded depository function. So instead of having two separate contracts, you can have a single digital dollar stablecoin contract that has multiple states, like an E. Let me get to the next. This is another way to think of it, where basically our upcoming stablecoins will have two different states, an on deposit or off deposit. And so you can actually, in one click, put it on deposit, which mints more into the bank's treasury, without actually losing without feeling that it's left, like it's completely transparent to the user. So this is something that we're pushing very hard on. Excuse me. I'm much better at panels. I tend to hyperventilate when I talk for too long, especially when I nerd out. So anyway, if you think of it, this is really what we're doing, is talking about M0 money, M1 money within the same smart contract. The other thing that, as an institution, we're really focused on is the concept of an open digital cash consortium. There are other consortiums that have come out, but they're effectively still like single contract stablecoins, right? Where there's a number of different banks that get together and say that, okay, we're going to issue this stablecoin and we'll share all the yield. The concept that we're really pushing is much more of multi-contract stablecoins. So bank issued, if it's issued by a bank, you would recognize the unbranded USD or digital cash of another bank and be able to settle it, as opposed to, the current situation is either, if you're a small community bank, you either join this consortium that you probably, similar to the Zelle setup, have very little power or leverage in. And by the way, I apologize to Zelle, whoever's here. We love Zelle. They're great. I didn't really mean anything wrong with Zelle here. It's just that I think that when you looked at banks trying to compete with PayPal and Venmo, it made sense for the 5 largest banks to get together and create a competitor. I'm not convinced that makes sense for digital cash or for bank-issued stablecoins. I think I believe that 5 years from now, even some of the existing consortiums are going to be great. I think they'll end up evolving into something that is unbranded dollars, where a small community bank could easily issue their own digital cash without having to worry about liquidity or bootstrapping. If if you're a small bank and you want to create your own branded stablecoin today, it's virtually impossible. So, yeah, the next steps for us, again, it was a really long road, but we're in the exciting phase. I mean, I guess we're in the building phase. I really didn't understand the concept of a 3-year de novo just in general for starting a bank. I mean, we had to inject an initial like 22 million capital in the Nebraska bank to basically have an initial base capital plus 3 years of expenses. And, that I really appreciate how hard it is to set all this stuff up. So year one, we're really working on building all the infrastructure versus next year, I think we'll really be focused more on figuring out how we can help other banks do this. We really want to stay more under the hood, behind the curtain, as almost like a correspondent bank for digital assets or banker's bank for digital assets, as opposed to a B2C play. But for us, we're taking the time to not take shortcuts and really do things right in terms of how we set that up. There are some issues. We have our first call with the Department of Banking in California next week. It's going to be interesting to see how other states really react to this novel charter. So we have a lot of work to do there. I think the Department of Banking has been really great in proactively getting out in front of their requirement to also be compliant with Genius Act so that we can end up getting the federal preemption that Genius Act accords. Clarity Act obviously is very important. It's not quite as critical for us because we're focused more on stablecoins, but I think all the things that you could build on top of the foundation that we're building are amplified if we're able to get that passed. So we're hopeful, if not this year, next year. And then we have a cleanup bill that we're working on with Department of Banking and other stakeholders on the Financial Innovation Act just to clarify things. And the goal, I think, from my standpoint is if we're the only person that ever applied for one, that's not a good thing. I think right now, if you look at the uncertainty, I'm not surprised that maybe people aren't ready to apply, but I think once we get through all the work that we're doing this year, I think next year you'll start to see a lot more investment, kind of piggyback on what we've done with the department, or I hope. I think that's it. If anyone has any questions, I appreciate it. So the idea is that in the short run, so we do plan to publish a consortium website that kind of explains the rules relatively soon. But the point is that if we want to, I don't think that banks really want to use other bank stablecoins. I think when we're talking to banks and we want them to start using ours, we just want to know that they're not getting, we want them to know that they're not getting vendor locked. So there could be certain phases. A small bank that just wants to turn it on quickly, they can just start using ours, use our API to issue like digital cash accounts that flow into an EUSD that we are issuing, minting, and burning, and basically running all the operations on, but then rev sharing with that bank. But then they can step it up, and as they get more comfortable, bring more and more in-house, all the way to the point where they're actually minting and burning their own stablecoin, right? So we're also planning, obviously, to make that work technically. There's a number of hurdles, namely just to be able to have settlement of multiple bank issued digital cash. And it's not like we would say that everybody needs to use our stablecoin. The whole idea is that we would also work with all the other existing stablecoins, the other consortiums, to be able to settle in and out. But the point is that we want other banks to know that they're not vendor locked in with us if they adopt it. They can't. There is a path to get full independence and have effectively all the same rights and privileges that we have.
Thanks, Paul. My name is Evan Egger with the Nebraska Bitcoin Association. I'd like to follow up on the point you made about being that resource for banks in the state and kind of the educational investments you're making in Nebraska as a form of reinvesting in the community. I did notice on Telcoin's website under About the Company that the location for Norfolk actually has an image from Norfolk, England. just wanted to point it out. Maybe that's an opportunity to correct it. But as you look into 2027 and beyond, how do you envision working with Nebraska banks and education here when it comes to understanding choices of blockchain, for example, overcoming the inherent centralization risks of proof-of-stake consensus mechanisms, choices of cryptographic libraries, entropy and key generation, some of those things that are ultimately coming for the banking sector? How are you going to be a value-add partner to Nebraska's community banks?
Well, thanks for pointing that out. I actually do spend a lot of time in Norfolk. I'm headed up there tomorrow, so I'll check that the image. No, I think that's we realize that most banks want to really just stick a toe in the water first, right? So I think we will start to do from next year, I hope, some sort of like, I don't know if it's conference or internal workshops with the banks that are participating. We do plan to do that, but at a minimum, the approach we're taking is not, hey, you have to fully understand this to start. We want to give you something that's turnkey that then we can support, and you wouldn't necessarily have to use our support too. There's plenty of resources out there, but we want to be able to show here's a template of exactly how to do it in a secure manner, and the type of partners that you could decide to use, and make it so that we can be a resource for them, but to go at their own pace to decide when and how they want to take on in-house certain elements of it.
James Wright with the Nebraska Credit Union League. We appreciate your comments today about your role in the industry in growing stablecoins. You used the phrase banking. I'm assuming that's pejoratively as a verb and not necessarily specifically a noun. So I'd be curious to understand, given that banking as a verb is represented by a number of financial institutions, which include credit unions, how you see your interaction with credit unions in the future and their growth in stablecoins.
Well, we're Switzerland in that regards. I'll stay out of that one. But no, obviously, whatever the law is in terms of the state or the country, I think it's been made pretty clear so that credit unions should be able to do this as well. So yes, I apologize for that. But yeah, we'd obviously be equally happy to work with the credit union. Come on, there's any softballs. All right, thank you very much. I really appreciate everybody's time.
Thank you so much, Paul. We are going to have about 15 minutes now until our next panel on consumer payment tech starts at 2:50 this afternoon. So keep an eye out for the chimes. We'll make an announcement in here when there's 5 minutes left. That next panel will start in 15 minutes at 2:50. And we'll keep it green when you're on time, and then red when you're ready to go. We also have a little clock down here for reference.
All right, everybody, thanks for joining us. Payment technology perspective.
A congressman. And we there for 11 years now. Yep. You know.
Cash App, which is our primarily on two sides. The mission there is really peer payment app. Lending.
I think you guys know Amazon, so I will.
%100%.
We don't.
I got it.
They're to blame.
Okay, well, that's. Spent 8 years in the House. Need to feel pity or shame. Back to Zell. Give us a little.
Prior to Zell, the banks. Of investment in brands around send you $10. I'd say it's not working. We need a single brand. Real-time payments mechanism to of how do we get ubiquitous
shy of that.
We're shy of it. chunk of the U.S. But as you look some of those smallest ones, like the to get to that final 20%, institutions, we're working with companies. Percent of those minority depository action perspective, we generally P2P. I think there's really, it's
a lot of room to grow for
there's
you all.
a ton of room. You know, those all
Cash App, card.
Yeah, it's really interesting. So we have but the thing that we found out of the standard W-2 last 10 years has focused a lot. They're often customers that are and what that means from a financial act. And I think a lot of that stems how we build.
I guess I'll speak first. These different buttons when you go to small or you can like pay with the idea, I think, from our convincing people that it was safe to put in their credit card. Have successfully convinced people mean, if they can convince you to put in your was that it's out to make a huge difference because it's just end up completing the checkout if they new service where Amazon you have to be able to handle the payments. Which people are
yeah. So
until Zelle came along. Once Zelle and so our fraud and risk deposit to make sure that it's not going to be that the person is who they're sending. Has evolved so much in the last 30 years. Created and just launched this year as our
I love those.
Yeah.
Like you have to build a relationship. You have to figure out what their numbers are and go from there.
Yeah, I think the first thing to state is there's no way we would be where we're at right now without the other financial institutions that we've been lucky enough to partner with over time, including one or probably both of which are on stage. And I think the thing to call out with Block that's unique is that we both partner with 100 plus financial institutions or partners, but we also have our own ILC bank, which is based out of Utah, and that gives us a dynamic setup where we're able to tap into the expertise, history of compliance excellence at some of our bank partners to launch products. For example, our card is issued by Sutton Bank based out of Ohio, and that's a really close partner of ours because the customer at the end of the day is a customer of both Cash App as well as Sutton, and so we take, we're daily online and on calls with Sutton to make sure that we're in lockstep with everything that we do. And then on the other side, with Square Financial Services, our subsidiary bank, we're able to do things a little bit differently. So far, we've been focused on lending with SFS, and it just allows us to underwrite customers that bank partners might not necessarily underwrite, as well as build experiences that just make sense to customers and that are as simple as the peer-to-peer experience that we built 15 years ago. And the other great part is that it's cheaper for us to operate with a bank that we own, and so we're able to pass on those savings to customers, which at the end of the day just compounds the business.
Yeah, and of course I could have asked the same question as Zelle. I mean, if you've got 80% penetration in essence, I mean, that's a lot of relationships that y'all have developed. Now, granted, it's not like you got to go golf 18 with these folks, right? I mean, it's mostly a zeros and ones relationship, but you still have to establish them. But what did he miss? Michael got it right?
Yeah, no, absolutely. It's ultimately partnerships that bring it all together. So 100% agree.
So let's talk about Amazon and the palm of your hand as personal identifier to make payments. Amazon had tried that. It was going all the way back to 2020. Seemed sci-fi at the time, and of course it was a little bit. Discontinued. Tell us a little bit of the story about how did that come to be and how did it cease to be?
Yeah, so this was a product we had called Amazon One, and I think there was a lot of discussion in the last session on preventing fraud and scams that makes clear that biometrics are a great way of proving who you are. And the idea behind Amazon One was we should have a solution for that, for people in person to prove who they are, and you could cut down on not just people impersonating you for the purposes of your payment, but for all sorts of things, and you could also prove that you were old enough to buy beer or whatever. And the idea behind using the palm print was that as opposed to a Face ID where there's cameras all around you and who knows who's taking your picture and building an image of your face or whatever, that you are in control of your palm, you are in control of somebody's scanning it. Like it's hard to get a clear look at. I can't see hardly any of your palm right now.
It's beautiful, really. It's magnificent.
Show it to the crowd.
So applause until the end, please. Thank you.
And so the idea was that this was an elegant solution, both in terms of allowing people to authenticate themselves using biometrics, but also without the privacy concerns that come with Face ID.
So it sounds great.
It was. I mean, we did not line up all the partners, I think, that others have had success with, and the decision. I mean, there are so many things that Amazon launches that are legitimately great, and then it doesn't have a big enough reach or doesn't fit with other products, or for whatever reason we deprecate stuff that I love, that my kids love, and this is one of those things. I think certainly everything that we learned in that process continues to be valuable, not just in thinking about how we prevent scams and fraud, but also how we use the biometrics in phones and built-in fingerprint scanners and stuff that are on computers in order to help secure the payment methods that we have through all sorts of partners. But so this exact product is gone or is on its way out, but the learnings are still important.
So, I mean, obviously we've all gotten a lot more comfortable with taking a picture of our faces. In fact, in the previous, the fraud panel before us talked a little bit about that, and even just this morning as I'm getting my Uber from my apartment in DC to the airport so I could get out here, I realized that although I've had hundreds and hundreds of Uber rides, I for some reason had never gotten verified, and all they wanted me to do is take a picture of my ID and then a picture of my face. I didn't even think twice about it. I mean, I just did it. I didn't have any residual fears about what if they get hacked and what happens to the moneymaker here. I mean, it gets out in the public domain. Have you given any thought to what is the future of biometrics? I mean, is the palm coming back? Is it going to be the face because that's easy? I mean, I assume it's not going to be our retinas and a urine sample for most applications.
I think the phone is the center of just about everybody's life. I think there's more wearables coming, but you don't need to have a separate device to do the biometric scanning if you're already carrying one with you that has your biometrics. So, yeah, no one can know the future, especially about all of this, but it seems like we're already carrying a lot of tools to verify our biometrics.
Yeah, you guys not really in your sweet spot, but any thoughts about that, kind of the future of the technology, validation, authentication like that?
Yeah, I agree with the devices, and I agree that ultimately, Citi was up here in the last session talking a little bit about how they know the device fingerprints, they see those devices, they can keep those devices out. So I think yes on the devices, and then I think it's like how do you share that data broadly across the industries, and that's ultimately directionally how it has to go, because everybody collects it in a unique way, keeps it in a unique way, and we've got to figure out a way to normalize that across industries.
I guess that's the other point I would make, is that if it's your phone checking your face against your phone's knowledge of what your face looks like, then no other company has to know. It's like, we deprecate Amazon One, we deleted all the biometric data, but people obviously have concerns about who has this information about me, and the more that you're using your own device to validate you, the fewer concerns you have about where else is that data going. Because the phone just says, yes, this is he is who he says he is. It's not actually passing the face print.
Okay, so both Cash App and Zelle would fall under Reg E. We talked a lot about fraudulent transactions a couple of panels ago, but talk to us about the difference between unauthorized transactions, fraudulent transactions, and then we also heard a little bit about first-party fraudulent transactions. Talk to me, is there a different regulatory treatment of those? Kind of walk us through that whole waterfront.
So I'll just, on Reg E, ultimately, it's got a consumer protection tied to it. And so it's focused on unauthorized transactions. And if there's an unauthorized transaction and it meets certain eligibilities, then you as a consumer have protections and the bank will correct that if it meets the eligibility. That's a good thing. But then the flip side of that coin is unauthorized transactions. And so when we talk about fraud and scams, fraud happens when you've got someone takes over an account and you get into your account and they send $100 to me, right? So now I've just defrauded you and another person was an accomplice in that. They took that money out. You didn't authorize that. You're going to be protected.
But I suppose it's different if they con you into doing it yourself.
And that's the rub. And that's where scams come in now. And so now, with a scam, you're going to actually authorize that transaction, and then it's not covered from a regulatory protection. So like my dad, just happened like a year ago. I call him up. He was a professor of mathematics, retired at the young age of 74, and he gets this call last year, and he says, I check in with him. I said, how's it going? He said, oh man, I'm really irritated. The bank called me. And I'm like, okay, why did the bank call you? Well, because they said they got to shut down an account. And I just like, oh God, no, Dad. Like, come on, what's going on? And ultimately, long story short, he actually got as far as to get in the car and drive to a bank because they wanted him to withdraw money from the bank. Luckily, he talked to the bank manager before he did anything more. And the bank manager, as soon as he got on the phone, of course, the scammer hung up. But had he actually withdrawn that money, that would have been an authorized transaction. He would not have been protected. He would have been out $20,000 had he actually taken that out. And so, the last panel talked a little bit about this, but the sophistication level, like I say, my dad was a professor. Most of my financial understanding is built on a foundation from him. And just watching him go through that and knowing that he believed that entire time that he was, on there with the bank is scary, and with kids and parents, unauthorized, in this case, authorized scams, they happen, and it starts with, you got to start with awareness of these things, which they talked a little bit about.
And we want to be a high-trust society.
Yeah.
And these scams undermine that high-trust nature, which is really terrible. Michael, what are we missing on this front?
Yeah, I think the one thing I'd add is that in the case, you need to, Reg E mandates that, if you're running a financial institution, that you have to have a really sound practice for intake and resolution of disputes. That's the requirement. I think the place where there's still a lot of room for excellence is in the defense. Disputes are quite preventable, at least a good portion of them, and so setting up there's no silver bullet, but setting up the systems in terms of risk architecture, as well as the awareness, you can run awareness campaigns not just on your Instagram page, but you can do it directly in the app. And then there's really a third category, which is making sure that when someone is, as we heard earlier, scams happen really quickly, but not all of them happen quickly. And so being able to intervene both from a real human reaching out to you and or using app experiences, when there isn't a banker at a branch to tell you that something might be going awry, what we focus on is really notifying customers in app to, we don't always know, is it fraud or is it not fraud, but it's really helpful when you can go and ask a customer and at least give them the moment to check themselves before they end up in a bad spot.
I know Flood's been running around taking care of a bunch of business. Is he in the room here? Okay, no, he's out. Okay, not a problem. Well, I do have to tell you, I mean, people talk about, an act of Congress as, almost this insanely difficult thing to be able to bring to fruition, and unfortunately that's all too often the case. But Mike Flood was the author of a Congressional Review Act, which rolled back, and frankly, this was a big get for him. More importantly, it was a big get for our country. But the CFPB under Chopra had basically wanted a lot more authority over this customer payment technology. The Customer Review Act, or the Congressional Review Act, rolled that back. So does anybody want to talk about the importance of what Flood and Congress did? He's not here, so you can crap on him if you want to. I think it's a pretty big victory.
Yeah, it's a huge victory, especially for us younger players. That the main way that we think about it is we want to be regulated, just like banks are, on like a risk-based system. And the thing that we are staring down with, before Congressman Flood's efforts were made there to roll it back, was really the opportunity cost of what it meant in terms of what we'd be giving up. In all the work that would have had to go towards that would have been work that would have been taken away from innovation for our customers. And so that was the really painful prospect, and why we're really glad that it went the way it did.
Anybody else?
Yeah, I'll speak to this. So, I think regulation is tough, like financial regulation is tough, and I think it's especially tough right now when things are changing quickly and we have lots of new entrants that are offering products that compete with long-established products, and nobody's going to get it right 100% of the time. But I think we saw a situation where we had a regulator who had been very clear for many years that he felt that tech companies, which you can define many different ways. We have .com at the end of our name, so we were of course in the crosshair. He thought tech companies were sort of a force for bad in the U.S. economy, and so he left the Federal Trade Commission, which has a lot of power over tech companies, and he went to the Consumer Financial Protection Bureau, which is focused on financial institutions. And the very first thing he did was to send a demand to 7 tech companies. Both of our companies were included, basically saying, tell me everything you do in financial services that could possibly be in my jurisdiction. Tell me about all the products and, how do you handle consumer complaints and all this.
Classic phishing expedition.
Yeah. And we responded. I think you guys responded as well. And then there was another series of demands. And then at the end of that, we felt pretty good because, among other things, they have a complaint database and we had 0 complaints. And at the end of that, he said, all right, we've taken a look at this. We're going to have to supervise all of you. We're going to set up exams and sort of set up this whole process. And we thought, well, that's not, what are we doing here? Why do you need to supervise us? And he said, well, the way this process works is
because these exams are a ton of fun.
Yeah.
Proctology exam in a business setting. This is great.
It's I will set aside that there was some very surprising estimates of from their perspective of how much an exam would cost. It's much less than you would think, much less than we would think too. Anyway, we said, like, wait, why? Why do you need to do this? And they said the process is, first we designate you for supervision, and then we assess the risk to consumers. And we said, well, that doesn't make any sense at all. And he's like, well, those are our rules. And so they started down this process, and they put out this rule, and thankfully, Mr. Flood, with the help of many votes, yours included, was able to pass the Congressional Review Act, and we got that rule overturned. But in the absence of getting it overturned, I mean, this process sort of started as a fishing expedition, and it could just keep expanding from there. Examiners, I'm sure all the bankers and credit unions know, examiners have tremendous power, and they could ask about all sorts of stuff. Financial services is a very, very small part of Amazon. We kept asking, like, but if you supervise us, it would just be this little Amazon Payments Inc., and they're like, well, we'll see. And so it felt like it started as a fishing expedition, pretty transparently, and it was going to just continue as a fishing expedition, and that's just a good way to get companies to just say, well, I can't be in any space that the Consumer Financial Protection Bureau regulates, and you just, I think, would have had companies leaving, the space entirely.
Viva la Mike Flood. I'm going to ask one more question, and then we'll throw it open to the jackals here. Generative AI, I mean, you get these buzzwords, right? I was talking to a friend who was getting ready to kind of go to market, and he's like, you can't even launch any product or service if you don't have AI as a part of your pitch. There is real power there, of course. So, I hate to make you do this in 90 seconds or less, but can each of you talk to us about how are your companies looking at generative AI and what's going to be the value there? Who wants to go first?
I'll jump in. So generative AI from a product perspective, we're certainly looking at like these agents and how you can leverage those. But today we are not leveraging any generative AI in the products that are consumer facing. Internally, we are looking at all the different types of AI for what you would expect, which is just like kind of make emails better, presentations better, documentation better. We do use different levels of AI, like machine learning and some of these other things to help build models, but we really haven't gone too deep into the generative AI area.
I assume that 2 years from now, you assume your answer will be very different.
Yeah. Oh, absolutely. A year ago, I sat on a panel and there was nothing that we were doing, and now it's become a huge part of what we're doing internally. And then because we are so heavily regulated by the CFPB and OCC and others, we have to be very careful about the use of generative AI,
for sure.
Of course, and so we're going to continually look at how we might leverage that from a consumer perspective. But to your point, 100%. A year or two from now, I'll have a very different answer. It's just leaps and bounds every year.
Well, of course, the rule of thumb, which is maybe undefeated, I mean, it seems true every time I apply it to a situation. People have a tendency to overstate the impact of technology in the short term and dramatically understate its impact over the long term. And I suspect that's going to be the case for AI too. When I first started feeding in prompts to Claude and Chat and Grok, I just thought, oh my gosh, this is wild. I don't know, was that a year or two ago? Really, my life is hard. Yes, it'll do some basic drafting for me, but my life has not been transformed like I thought it would. That may be coming. What do you guys think?
Yeah, I can take it. I think for us at Block, it has been, the last 6 months specifically have been far beyond our wildest imaginations from an AI perspective. The way we operate day to day has just significantly changed, and I think the thing to call out is that those that are working the most on the cutting edge of AI right now are technologists, engineers, and so they have focused on disrupting their own job, and that's really where we've seen the change at least be most, have the most depth at first. It's really in the way that we work. More than half of the company is comprised of engineers, as well as like highly technically fluent folks. And so the way that we operate day to day is just a lot different, and the speed at which we're able to deliver new features, improvements, so on and so forth is orders of magnitude greater than it was even a matter of months ago.
That is powerful.
Yeah,
that is a big difference.
It's been quite powerful. I think the next number of months or years, the question is really going to be how do we turn that around? It's already serving the customer behind the scenes, whether it's from a support perspective or fraud review, what have you. What's really going to be the next test is whether we can use these bots, these agents, to empower customers to help themselves out, and we've started that. So on the Square side, we have something called Manager Bot, which you can think of as an agentic employee that you're able to run restocking operations through or run time card closures. And then on the Cash App side, we're just a little bit behind, but we are rolling out something called MoneyBot behind the Square side from an agentic perspective, and that is not just a chat interface, but actually something that allows you to receive instruction or guidance from this, what we call MoneyBot, which is like a chat agent. And so for one example would be, if your rent's coming up, but you have your Netflix bill, it's like, hey, you might want to cancel your Netflix subscription or put it on pause until you can hit your rent bill, which for our customers is super relevant.
Now, if my mom had suggested that to me, I'd be irritated, but I suppose if it's the system, maybe I accept it less emotionally. Brendan, what are we missing?
You want me to talk about what Amazon is doing in AI in 90 minutes or less?
Yes, 90 minutes, exactly right. Yes, let's run the crowd away.
There's a lot. I guess I'll highlight a couple things. I mean, one, we do have customer-facing stuff. Our AI-powered chatbot, which used to be called Rufus and now is called Alexa, is pretty powerful, and you should play around with it.
This doesn't count against your 90 seconds, but is there, I mean, we've had that smart speaker for years and years and years. Is there a specific way in the last year or two you think it's gotten more powerful?
Yeah, I mean, I don't really think Alexa was that smart prior to about a year ago. I think it's the under the hood has been totally reworked, and it's using a totally different architecture. But yes, I think it's able to access much more information. It's able to have more of a conversation with you. It's able to have, I think, certainly more of a free-flowing conversation with you.
So it's more organic and less engineered.
Yes, I mean, I think it draws on the same strengths that a chatbot has. It seems more like you're talking to an actual. I feel like Alexa used to be relatively good at you would ask it to do a thing, and then it would try to do that thing, and now you can have more of a
very concrete, discrete steps.
Yeah. And now it's much more natural and flowing. And I think, I mean, there's a lot of stuff on Amazon. The website has all sorts of different categories and different filters and things like that. Sometimes they are great. Sometimes they're not exactly what I'm looking for. I actually find that I have an easier time going into the formerly Rufus, now Alexa, and just saying, like, I need a printer stand. The width that I have to fit it into is 18 inches wide. I need it to weigh, no more than 10 pounds or whatever. I don't care what color it is. Like, show me the options you have for that, rather than try to put in printer stand and then try to find if there's filters for whatever. Like, for me, it's much easier to just let an agent go through the vast amounts of data that Amazon has on all of its products and find what matches my preferences, rather than me trying to one at a time put in my preferences. And so I think we're already seeing consumer adoption of AI in that form. I can also speak to all the stuff that we do as Amazon employees. But
Alexa, how do I get 7 to 10 Democratic Senate votes for clarity this week?
I can't believe you waited this long to try.
I know.
The answer was waiting there the whole time. I think Alexa would say ethics reform, but I don't want to tell you your business. So I will also say, to your point of you tried LLMs and they were cool and powerful, and then they haven't really changed that much about how you do your job. Internally, we now have a thing that we call Quick, which is, I don't actually know what it is, but it's one of the LLMs. But it's our interface, and it's plugged into the Outlook, and it's plugged into Slack, and it's plugged into all the files that I have on my desktop, and it's plugged into everything. I have tried to use it to do my job, and I find it's not that great. It's slower for me to ask it to, delete all of the fundraising emails I get, rather than not yours, only the bad ones, than it is for me to just go in Outlook and delete those things. So it's not very good at that sort of stuff. It's good at writing very brief email responses or whatever. The thing that I have figured out this summer that makes AI more useful for me is that I don't use AI to try to do my job. I use AI to try to do the things that I wish I did that would make me better at my job. So I ought to go. I always see people, I'm like, oh, I haven't seen you forever, we should get together and have coffee or whatever, and then I never follow up with those people. Or I send an email saying hey, how about next week? And they respond, and then I never respond to that. But with the AI, I just have a thing now every Thursday. It looks at my calendar for the next week. It looks for 2-hour windows so that I could get there, have an hour with them, and then get back. And it has just a list of people, and it sends out emails, it works its way through that list, just saying hey, do you have time to get together next week for either of these windows? And now I get together with people that I want to see, and it's great at that. Or I come back from a meeting and I've got my notes written down. I'm I should send these notes to these 4 people, they might be interested, and then I never do it. But with AI, I just dump it in there and say, can you send a summary to these people? And so anyway, it's not the stuff that I was doing already, it's the stuff that I wish that I did that would make me better at my job. That's where AI has been a big help to me internally.
So now when my request to grab coffee with you go unanswered, it's not just you that's ignoring me, it's Hal the machine as well that is...
That's exactly right.
Very good. All right, let's open this up for any or all. Go ahead.
C. Kirkshank with the Nebraska Bitcoin Association. This question is directed at Michael. Michael, part of our educational focus here in the state has been helping small businesses protect their profit margins. We've been targeting the Square terminals throughout the state and onboarding them to the Lightning Network. I just wanted you to expand a little bit and tell us about that strategy and why that has been a key focus of Cash App and Square.
Yeah, thanks so much for introducing yourself and for the work that you've been doing in Nebraska. So Block for roughly seven-ish years has, for its entire existence has been a Bitcoin first company. And so 7 years ago, you saw lots of consumer finance apps start to introduce non-Bitcoin cryptocurrencies. We did not do that. We took a principled point of view that Bitcoin is at least for now, the winning cryptocurrency or the internet's version of money. And that started with, this is a brief history, it started with buying and selling Bitcoin on Cash App right around the time that lots of other apps were starting to introduce that. It's since expanded. We now have a business unit that is solely focused on Bitcoin self-custody. So we have our own, we sell a Bitcoin cold storage solution, which is a fully separate app, and that's really for someone who's gone deep into Bitcoin. And then on the seller side or the Square side, what we've done is allowed merchants who are interested in Bitcoin, which over time we have seen has gone up quite meaningfully, to actually maybe I shouldn't use the word bank, but lowercase bank with Bitcoin, so they can accept payments over the Lightning Network, which is just a QR facilitated payment. And so if you're, hopefully you've done some good conversions, and folks in this room can go see that out in the wild, but it really allows our merchants to cut down on their cost of processing, as well as just bank with the Bitcoin, which they might already have an interest in or holdings in.
We get you answered? Good. All right. Who's next? Oh, yes, sorry. Yeah, movement is, they've turned on these TV lights for reasons that I don't quite understand, but I'm sure we look fabulous.
Hi, Chris Schuler with Centris Federal Credit Union. This is really probably directed more to my friends from Cash App and Zelle. You spoke about Regi earlier. As credit unions, as issuers, we disproportionately bear the cost of many of the transactions that get reported to us as being fraudulent. Unfortunately, I do not participate with Zelle, but Cash App, my members love you, and I love that, but we have fraud. And then when you have things like Visa CE 3.0, a lot of that gets shifted back to us. So I'd like to understand what your company's stances are on your responsibilities for determining that end receivers are not good actors, and what are you doing to shut them down? Because right now it seems like there's no end in sight.
Thanks for your question. The bottom line is we're doing a ton, and I think the thing that's probably worth touching on is, we talked about in the prior panel, we heard a little bit about data sharing and communicating directly. We at Block and Cash App would much rather have a direct conversation than go through Visa or a report that's been filed, and we do a lot of that right now. And so we should get in touch after this to see what might be a local or specific issue to your union.
On the Zelle side, thanks for the question, and we need to talk later because Centris is on my list of folks we need to make sure join the network. But we have 99.98% of our transactions are fraud-free. And the reason for that is because we have kind of a closed-loop ecosystem. We know the senders, we know the receivers. We share that data with the institutions because we want to keep those fraud rates as low as possible. And so ultimately, it's sharing of data across institutions, and as soon as we see fraud, we actually link that person across our network, and we remove them from all the banks. We block them out. So it's really important to us, and it's important that we keep, I want 99.98 to be 100%. That's what we're trying for. And we're every year we basically just keep tweaking and tweaking the data sharing so that we can tighten that down to eliminate fraud from the network.
Any follow-up or additional thoughts? Or okay, very good. Who else? Going once. Oh, very good. And repeat the question, if you would.
So the question, I think, was about the Just Walk Out technology, which is where there's cameras that are looking at all the shelves and looking at the people in the store, and you just take from the shelves what you want to get, and then you walk out and it charges you. So this is a technology that we rolled out first 5 or 6 years ago. Actually, originally trying it in grocery stores. We're no longer trying it in grocery stores. But you'll see it in airports, train stations, a lot of places that are just a grab-and-go setup. And so you swipe a credit card usually, or tap your phone to go in, and that's going to be your payment method. And then you go in. There are cameras watching, tracking you, cameras for each item on the shelves. There's also weight sensors on the shelves. And through the magic of data processing, they are able to they're remarkably accurate. They had tests for Amazon employees, and I went the first time. I thought it was very cool, and then I told my daughters about it, who at the time were probably, 3 and 6 or something, and I took them, and I did not think it through because, of course, they just ran all over the store just grabbing stuff, and I was like, no, like, we don't need that. And I was putting stuff back, not even on the shelf where it should have gone, but just, we don't need cookies, we don't need ice cream,
Would that be unauthorized fraud?
Well, as it turned out, there was no fraud at all because the system was able to track only the stuff that we ended up with as we left. So it's not perfect. It is actually vulnerable to certain types of fraud that I won't share here because we're being live streamed to the criminals of the world. But it's a cool technology, and I think in those settings, it's really handy. So I think where you just want to be able to go in quickly, not have to stand in line to check out. I think this is like I said, like airports and train stations. It's also potentially in stadiums and ballparks when everybody runs to the concession stands at halftime or the quarter break or the hydration break, I guess we have now in one sport. That you want to be able to just have everybody get what they want as quickly as possible. And if you have if the technology exists to just track people and have them grab what they want, then I think it's great, and it seems like it works. But we no longer have the grocery store or convenience store concepts that we were trying to use with it.
Can I ask another?
If you think that our panelists have made payment technology far more interesting than you ever could have expected, please pay them with a round of applause.
Just a moment away from our last panel, and then a reminder, we have hors d'oeuvres and some adult beverages and afterwards, and so we invite you to come. And all right, we're
We're getting our panel together, too. We're getting the band back together, y'all. Everybody, I'm Jason Ball. I'm the President and CEO of the Lincoln Chamber of Commerce and the Lincoln Partnership for Economic Development, which means I have learned like 17 new words today. I don't know anything about financial technology, but they put me last because being in the chamber business for as long as I have been, I always get my audience to the bar on time. So I'm gonna run a tight ship, and I promise you for that. Thank you for those pity applause. I love that. I also just want to note, and I don't know if you can hear me anymore, what a pleasure to have Congressman Johnson from South Dakota here. He and I got to work together briefly when I was in Sioux Falls, South Dakota. Great leader, and that also, I think, highlights the real uniqueness of these types of events. I've had the pleasure of working with a lot of folks in Washington. Very few of them can pull together this type of quality program and quality audience to bring world leaders in technologies like this into any community. Certainly Dusty Johnson's an example of that, as have been all our panelists. It's a really special thing that Congressman Flood can pull together. So if we can just give him a round of applause. I don't know if they can hear me, but Congressman Flood, thank you. Also, real quick, if I can keep you clapping, give a round of applause to Congressman Flood's team. I know not all of them can hear us, but man, they have worked hard. There are a lot of moving parts to this event. Want to make sure that does not go unrecognized. I'm going to steal one more beat, and I'm going to give you all a cue. But if some folks in the room might know Jay Wilkinson, he's the founder of a company here called Firespring and the Do More Good movement. It's a separate presentation all in itself. But when you get to speak at one of Jay Wilkinson's events, you get a standing ovation at the beginning. So I'm going to just briefly introduce our panel, and I'm dead serious about this. Please back me up. We're going to start out with a standing ovation for our panel that's holding down the anchor with me, okay? I am joined by J.P. Richardson. He is the co-founder and CEO of Exodus. Courtney Rogers, she is the COO of Hudl. Bill Udell, he is the managing partner and COO for Don't Panic Labs. And Shafiq Barber, he is the founder and CEO of Marble Technology. Everybody welcome them to Innovation Campus with a standing ovation. Yeah. We're ending the day strong, and Bill is solving problems like he always does, grabbing his own microphone. Y'all, we're gonna get to your Nebraska story here in a second, but just wanted to start out with just a quick company introduction. What's your company? What kind of products is your company involved in? And tell me just a little bit about your company's background in Nebraska, and we'll get into some of that storytelling here in a moment too. And JP, do you want to start us off?
Hello. Oh, there we go. There we go. All right, thank you for having me. So Exodus was started about 11 years ago right here in Nebraska, and it's often amusing when a lot of people are like, where are you from? Where are you from? Where are you from? I'm like, I'm from Nebraska. And they're like, wait, really? I'm like, yeah, I'm from Nebraska. So it's been 11 years, and we are a publicly traded company that makes an app to manage a portfolio of crypto, to make it really simple to buy, store, and hold your crypto. And we recently acquired a company to help us make it easy to spend your crypto wherever MasterCard or Visa are accepted.
Thank you, Bill. We'll just go right down the road.
All right, Bill Udell from Don't Panic Labs. We've been around for about 16 years. We're a software innovation company. We were born out of a venture capital company who set out to solve a couple of problems that were happening 16 years ago in Nebraska. At the time, Nebraska was ranked 52nd out of 50 states in venture capital. Just let that sink in for a second. We were behind DC and Puerto Rico in venture capital at the time. And we really had a brain drain problem. A lot of the best talent was leaving the state of Nebraska. And we thought, well, you know, what better way to help solve that kind of two birds, one stone than to raise a venture capital fund that could actually create some software startup companies right here that people could get really excited about and go work for. Fast forward a little bit, we recognized that innovation doesn't just come from startups. Great jobs don't just come from startups. They come from existing enterprises. And so Don't Panic Labs actually expanded into working with traditional enterprise businesses. So now about a third of our business, I would say, is still entrepreneurial endeavors. We still build a lot of startups. And then the other 2/3 is traditional business and helping them to innovate as if they're a startup.
Great. Courtney.
Hello. Courtney Rogers, I'm with Hudl. We just celebrated our 20th birthday this year, and we were born out of the University of Nebraska, and so we've been here headquartered in Lincoln the whole time. We now operate around the world. We build sports technology solutions that help sports organizations with team performance, with athlete development, and increasingly more and more with their fan engagement and their back-of-house operations. And we are very proud to say that we are Nebraska born and raised.
Shafiq Barber with Marble Technologies. Marble was founded in 2020, right in the middle of COVID, not necessarily to solve a COVID problem, but just like many supply chains, the food supply chain, COVID just put a big magnifier on it, and specifically on the processing aspect of that supply chain. So it was a thesis for a company that we had at the time. Food processing in general, specifically meat processing. How do you make jobs easier? And meat processing, how do you make the food safer? That's what we set out to do. Marble was basically founded around that thesis, and we went to work on it. Today we've got 40 employees. I started the company out of Cambridge, Massachusetts, and realized there's not a lot of cattle out there, so I decided that I need to move back here and get settled. So this is where the company's headquartered, here in Nebraska. We have about 40 full-time employees. We're actually on this campus. We're going to be in Omaha as well. We build the full stack. We do the hardware, we do the software, we do the AI. That is all built in-house here, and we take it out to the industry.
Awesome. I love these homegrown Nebraska startup stories. So for each of you individually, how long have each of you lived in Nebraska, and what brought you here? And we'll just come back the other direction. Shafiq, if you want to kick us off.
Sure. So I moved here in 1998. I'm originally from Syria, and I came to Lincoln, Nebraska, and you could have sent me to the moon and said, this is it. But your typical immigrant story, family. I had an uncle who was going to school here, and that's who we knew, and that's where we came. And so I went to high school here, and I did my undergrad here at the university, and that's what brought me here. The good life.
I've been in Nebraska most of my life. I was born in Lincoln. My family moved to the East Coast for a while when I was little, but we came back here by the time I was in elementary school. And I went to the University of Nebraska. I originally wanted to be a veterinarian. That didn't pan out, so it took a different turn. I very much thought that by the time I graduated, I would head back to the East Coast. But I met my husband in college. He was actually one of Hudl's first interns. He went to the same entrepreneurship program as the founders. And that has been such a wild ride that ultimately I ended up jumping on, and so we ended up staying here. We now have 2 small kids. My son is 6 and my daughter turns 8 in a couple days, and Nebraska is such a great place to raise a family that I can't imagine being anywhere else at this point.
Show of hands, who's heard of Burwell? That's where I'm from. So I'm a Nebraska kid through and through, though if you'd asked me in high school, I would have said I'd be in New York. It turns out that Lincoln Airport gets me wherever I want to go, and so being here in Lincoln has been a great choice.
I'm born and raised, have been here for 43 years, and I have not lived anywhere else. I do remember as a kid wanting to live in California, and now I couldn't even imagine living in California, not to knock too much on California. But more importantly, it's why did I choose not to leave Nebraska in today's modern world with the technology that's provided to us? You can create a company anywhere in the world, and you can hire the best talent anywhere you want in the world. And so that allowed me to create Exodus right here and also hire from Nebraska, but also not leave Nebraska because I love the way of life and I love my family here. And so that's why I wanted to stay, and I never left.
This is the best intro for our next question, and JP will just go back the other direction since you're already on my wavelength here. So Congressman Flood likes to say that Nebraska's greatest resource is its people. You just gave a great endorsement of that. Talk about the importance of hiring and retaining smart and talented Nebraskans.
Yeah, absolutely. As mentioned, from a retention perspective, we often talk about we can't have the brain drain. Well, we don't We don't need to do that. I mean, it's really, again, about the technology that allows a person to work anywhere in the world, create companies from anywhere in the world. And when it comes to retaining people, I mean, Nebraska has such great people, right? I mean, I know pretty much everybody in this room understands that, but it's like I'm in awe of the work ethic that's here. And when it comes to bringing people in, recruiting people, I mean, I think it's really important just to sell the way of life that people want to have great family lives, and people don't want to pay millions of dollars for, a 3,000 square foot house like you have to on the coast, right? And so Nebraska is a very affordable place to raise a family and build a business, and I think we need to get more of that message out there.
Love that. Bill, love all that. Gosh, we knew a long time ago that we wanted to kind of stem the tide of people leaving Nebraska. Kind of famously, back when we only had about 20 people working for Don't Panic Labs Nebraska Global, we actually took the entire sophomore class of the Rake School as interns.
Yeah.
So we actually had more interns in our space than there were employees. Because we wanted to make sure that we could give them some great experiences to see things that were different and interesting and startup, so that they could engage in the community and see that you could do things here. Yeah. I think that's what's additionally really important. People don't get necessarily drawn away for the big dollars on the coast. They get drawn away because they think they can work someplace really cool. And so what we have to offer people at those stages of life are those really cool opportunities. So if you don't know what to do with an intern, figure it out and give them some cool opportunities, and you'll be a part of that story of how we keep people here.
Yeah. Courtney.
Yeah, I think something we talk about quite often is the grit of the Nebraska ethos in general, and how amazing that is as a kind of foundation for building a business culture. It's something we're very proud of, this Midwest ethos, but as we bring in partners from the coast to come see our business, it's something that gets commented on all the time. And we, like I mentioned, have offices and a workforce that's truly globally distributed, but the heart of what we're doing is based here in Lincoln, and that is a very important piece of our culture that we've been able to spread out across this global workforce as well. So it's fun to see kind of that Nebraska Midwest work ethic permeate throughout a global business.
I have to mention, I love Hudl's practice, though, of even for your global workforce, all 5,000 or 6,000 of them come all the way back to Lincoln once a year to have Hudl Week, which is an amazing thing to see if you haven't.
We just did it. It was awesome. We're still riding that high. Yeah.
Love it. Speak.
Yeah, there's always that chicken and egg question, like, do you need great companies to retain great people, or do you need great people to retain and keep good companies here? And I think we got both in Nebraska. We got great companies and we got great people. I think we need more of them. I think we don't have a quality problem. We have a quantity problem, if I was to describe it that way. And I think AI, for the first time, I think for places like Nebraska, I think it's leveling the playing field for us. What I mean by that is, I think Sam Altman or somebody talks about, like you'll see like one person building a $1 billion company or something like that. I don't know about that, but I do believe that you can build a $1 billion company with 100 people or less. These 100 people have to be pretty phenomenal people, which is really what we have here as a true advantage.
I love it. I love this whole conversation. I'm gonna shift into some individual questions, but if others want to chime in, please do. But Bill, I'm going to start by picking on you. What's an example of an interesting software solution that Don't Panic Labs has worked on with a client, and unpack the story of how that project came to be. Brag, man. Put some swagger on for this one.
I have hated this question ever since you sent it. It's like picking a favorite child when you look back over kind of 16 years of creating interesting innovation. Yeah. Honestly, in this last year, we met an innovator at AgTech Connect, actually, in this space, who had this vision of equine telehealth. There is a stark shortage of large animal vets. And large animal vets don't tend to actually go equine, they tend to go bovine, right? And for those that own horses or been around horses, you also know that they're kind of brittle. They tend to get sick fairly often. And his vision was we could use computer vision and AI to actually detect a lot of the behaviors that would indicate that a horse may be sick. He hadn't actually built any kind of proof of concept. We went out to meet with him at his horse barn and meet his horses, and he told us the story of a horse that he'd lost to colic. And this was a passion project for him, and we started to look at the behaviors that we'd have to monitor and learn with AI, and we're like, actually, we could do this. And so we sat down with the hardware and with the cameras and with AI, and not only did we figure out how to do this, we figured out how to actually build an equine data set that can, with almost 100% accuracy, identify an individual horse in a group of horses, can almost with 100% accuracy identify certain diseases that may be happening with that horse. Much to the delight of this particular entrepreneur, we don't have to do any of it at data centers, which he didn't really worry about. But he said the audience that I'm selling to actually cares right now whether or not things are having to go to a data center, and we're actually doing it all on the edge on a device, which is also pretty phenomenal that we have that much AI power, in a quantized model on the edge. And so that's been a really cool convergence of all the things that are happening just with that one thing that we're doing there. Those are probably the easy stories. The bigger story, I'm going to indulge and do one more. So we have had some partners. I mentioned that we work with the entrepreneurial, innovative, larger businesses as well. One of our partners is actually a very large agribusiness company. And we have what are called studios, where we actually have sets of people that are lined up behind specific problems that innovators face. And they came to us with a problem that was, our platform is really old and it's kind of holding us back. And, as we dug into the platform is holding us back, it turns out that it wasn't just platform holding them back. They actually had massive opportunities to really transform their entire organization. And at this point, we have an area called Launch Studio that helps us do innovative products. We have the Business Change Studio that helps to take care of partner problems. We have the People Change Studio that actually helps people grow and develop their skills. And then we have a Product Development Studio that just helps to build new products. This one Nebraska partner, we have given them an unfair advantage. And if I have to be really honest, that is why Don't Panic Labs exists, is to give Nebraska businesses, Nebraska innovators, an unfair advantage. And the most gratifying thing has been giving this business and all the businesses we work with that unfair advantage.
I love that. I love that Don't Panic Labs' ethos was, hey, Nebraska can be having more of this activity. Nebraska, I think, has, in Lincoln specifically, has had to be maybe more intentional about building this ecosystem than other places have not needed to. Your first example, that's a company that's a recipient of a Launch L&K grant that they've received through the Partnership for Economic Development here. I believe they're working with Invest Nebraska and maybe the Combine as well. Like we went from a resource and environment depleted ecosystem here to one that's got a lot of choices for people, and they can plug in where and how they need to and choose what fits their journey the best right now. So I love that story, and I love that Nebraska Don't Panic Labs has been a leader in that space. So thank you for that. Courtney, I'm going to transition to you. Since we're telling stories of the glory days, and during my MBA program, I had to take classes with all three of the founders of Hudl. They did all their group work together, and if I was a smarter person, I would have sidled up to them and said, hey guys, can I be part of your project this time? They were all super nice and had this crazy idea about making it easier for coaches to share video for games. Tell us the story of Hudl's founding and maybe how it evolved over the course of 20 years compared to what it's doing now.
Yeah, absolutely. So I'm guessing the majority of you know Hudl as the company that does football highlight videos or helps athletes get recruited to college football programs. Jason kind of alluded to this, we are so much more than that now, but that's really where the idea stemmed from. David Graff, our CEO, was working for the University of Nebraska football department. He was embedded with the coaching staff and saw how much time and energy was wasted burning stacks and stacks and stacks of DVDs so that players and coaches could take them off campus and either study themselves to improve or study an upcoming opponent. And then there was a bunch of governance and security around making sure those came back into the building. This was about the time when YouTube was becoming a thing, so there was a proven pattern for online video, and they said, hey, we can probably do this for the Nebraska football department. That then turned into the idea for a business that would serve the NFL and D1 football programs, but they very quickly realized that that is a kind of hard market to sell into, and there is a very limited number of teams. But through this journey of pitching this product, they kept hearing from high school football coaches that not only did they have the same problem, but their problem was actually much more acute, because to trade that video on a VHS tape or on a DVD, they would have to get in a car. We have schools from across the state of Nebraska who are playing each other. That could be a 4-hour drive to meet in the middle at a Runza parking lot on a Saturday, hand off that video and drive 4 hours back. And if you know anybody who is a high school coach, these people put in the craziest hours. They are so dedicated. They are working early, they are working late on the weekdays. They want some time back on the weekends. If they're gonna spend it working, it should be with athletes or developing game plans, not driving. So they pivoted into the high school space. The product obviously had a great value proposition. And over the course of the next few years, they ended up in a great position in terms of the high school football market share that they had captured. And so at that point, there was kind of a decision to be made. It was a great sized business. Do we kind of double down on what we're doing in high school football and turn this into a nice kind of lifestyle Nebraska business? Or do we go all in, because there were very clear signs that this solution would add value to additional sports at the high school and youth sports level? But we were also seeing some interesting patterns emerge in college programs wanting access to this content for recruiting purposes, and that global recruiting ecosystem was starting to come online in other sports. And we said, let's go all in. So in 2015, we really started to accelerate into expanding our platform to be multi-sport, but then also started acquisition journey. So we bought a company called Sports Tech out of Australia that gave us the core of our professional platform. Since then, we have made many additions to our platform. We're not just a video analysis and sharing tool anymore. Like I mentioned, we do fan engagement. So high schools stream their video content on our platform. We help high schools and club teams around the world sell all of their tickets, share highlights. We also do operational work for our customers, helping them manage schedules and messaging and the registration processes to get athletes into their ecosystem. We have a whole fleet of AI-powered smart cameras where customers can install those in their facilities, and it captures it as if a video camera person is operating it at multiple angles, but it's all hands-free with AI that's running on the edge. And we not only do that in the high school space, but we do this at every level of play. So at this point, we operate in over 140 countries. We have customers that are at the very, very top end of sports. So we work with the majority of teams in the NBA, the WNBA, the NHL. We also work with every team in the top 5 European soccer leagues. And then we even work with sports that you probably are less familiar with. So every professional team in the Aussie Rules Football League is also on Hudl. So at this point, we're working with hundreds of thousands of teams around the world. And it's crazy that it all kind of started at the University of Nebraska.
That's such a fun story. A global story from here. I love that. JP, let's go to you here. Do you have any thoughts on the current state of play with digital asset market structure legislation in Congress? How do you think federal legislation would affect Exodus?
Yeah, so if many of you have heard about the Clarity Act, and what the Clarity Act ultimately is for businesses in the United States and those that want to invest in crypto from traditional markets. It provides clarity on how the assets should be classified from a regulatory perspective. It has a lot of other good things in it for us as a business. So one thing in particular for Exodus is that Clarity says that you, as the person that holds your money, if you're using a self-custodial platform, and I'll explain that in just a minute, that you have the right to do that. So when I say a self-custodial platform, that's what Exodus is, and how that compares to like a Coinbase, who you're more than likely familiar with. Coinbase, you typically deposit your funds into Coinbase, then Coinbase holds access to your funds. Whereas Exodus, you hold access, we do not touch your money. Now, there's of course trade-offs, pros and cons, and those are for another conversation, but nonetheless, by Clarity saying that you as a consumer in the United States, just citizen of the United States, this is a right that you have and that cannot be changed by any federal regulator. So that was one very strong benefit. Another one is the aspect that Clarity gives the federal preemption. And so what that ultimately means is that if any states don't like crypto, or any state attorney generals, then they can go after companies who serve citizens of that state. And by having the Clarity Act, if it would pass or does pass, and it's looking unfortunately a little shaky right now, then this would ultimately say that these states could not do that, because the federal government, of course, would have that jurisdictional authority. And again, these states, this actually happens. In fact, Exodus ourselves, we are facing one dispute with the state, and the state went so as far as to say that because they see the federal government's connections, they claim they see the federal government's connections with crypto, and they think that it's more of a counterbalance to what this state is doing. And they also had insinuated that because of our donations to the Republican Party as a business and my donations to Trump, that therefore, that's part of this. So Clarity would have inoculated all this. That being said, we fought a number of crypto battles historically, so we're just going to keep building and just keep moving forward.
New space, new technology space can sometimes be messy, and we all know the legislation always takes a while to catch up to the state of technology. And I think that's part of what we're struggling with here. Shafiq, help us understand how Marble Technologies has changed traditional meat processing. And y'all go check out Marble. They have some amazing videos online as I was doing research for this today. Really fun products.
Appreciate that. Thank you. So our meat supply chain is pretty phenomenal. I mean, it is, if you compare, what we do, how we do things relative to other countries, we're at a high level, we're very, very, very efficient. Now, if you look at, both sides of the supply chain, you'll realize that 80% of that labor goes within that 24-hour period to do that processing part. Pretty efficient on the production, pretty efficient downstream. There's that 24-hour period where all that labor is concentrated, and that's what COVID put a magnifier on. It just how do you strengthen that part of the supply chain, and that's really what we went to work on. We went back to the drawing board a little bit and said, okay, with today's technology, with this product mix, with this input, aka cattle or the animal, how would you do meat processing? And that's really what we started working on. What makes meat processing difficult is, if you think about it, you got your input, which is the cattle. That is highly variable. Different breeds, seasons, regions, all that stuff is coming in. You've got the output. That is also variable. At the end of the day, like you're selling a commodity, different demand, different seasons, all that stuff. The price is changing on you. There's also, to what you're producing at any given day, that's also highly, variable based on the labor, the type of skill sets you have. So it's, like you think about AI, like that's a great problem for AI. Just like, what should we produce out of this input for this output? Based on, we want to maximize, X factor. So there's that question that we decided to go work on. What kind of technology can we build to answer that question of what should we produce, and then how should we produce it? That's also what we took on in the form of automation and robotics. So today our technology, we enable all the, we're able to answer these questions by building pretty sophisticated imaging technology. It's camera-based stuff, but then we're also developing kind of X-ray CT level, kind of what you see at a hospital, but we're applying that to this industry. Again, to kind of understand that structure of that variable and decide what you want to optimize it for. And then we use that same technology to enable robotics to do some of that work. Are you going to be able to automate every single task within these facilities? The answer is no. There's always a human in the loop, and then there's, when you're looking at automation, it's the question of, what's that robot to human ratio? And especially in something like food processing, I mean, the operators are not just doing the work, they're also the quality assurance for what's happening inside of there. It's more of like, how do you enable, how do you increase labor efficiency, how do you make the jobs easier, and again, how do you make that product safer? That's really when we go to work, when we think about solutions, we're trying to optimize for these.
When I look at a product like that, I kind of think of the transition that modern manufacturing has gone through in the past 30 years, though. For folks that haven't experienced it, manufacturing today is really cool, a lot of technology in it, safer environment, and I think what y'all are doing is moving that industry in that type of direction too, and I think it's going to be a game changer. Let's talk really quick, if that's possible, about, and I'll open this up to anyone, whoever wants to jump in. How is generative AI changing how your company operates and how you think about markets? I know that's a loaded question for the last end.
I can jump in on that one. So we have a number of engineers, and a year ago we were doing about 2,500 change requests on the software in a given month. This last month it was around a little over 5,000. So it's a 2x with the same amount. Now I actually think that's quite bad for how great that AI has gotten. For anybody that has an engineering background and sits down with like a Claude code, and you can go from idea to implementation in just a matter of moments. And so it has radically changed our business from an engineering perspective. It's radically changed my own life in terms of how I use it. I actually have my own custom agent called Sky that takes everything that people are sending me and archives it, and then allows me to produce reports on what's happening to the board, or make better decisions with whatever challenges that I'm facing. So AI has been game-changing for us in Exodus.
Boring nerd out. So for 16 years, we've really leaned into software engineering, architecture, and design. That has been our bread and butter. And we've said all along that software engineering is an engineering discipline, not a craft, not an art form. And we've been saying for years, the fingers on the keyboards, the production of software is not the job. The job is the engineering that we put into it. And really, generative AI has just been the culmination of what we've believed for years. Nearly 100% of the software we write now is actually generated by AI. Our engineers, a typical day, for one in particular, who's part of our launch studio, he comes in the morning and he looks at what Claude wrote overnight, spends most of his day up until about 2 in the afternoon reviewing code, reading code, making sure that it's actually doing what we expected it to do, and then spends the last hour and a half of his day standing up the PRDs so that overnight Claude can write all the code again.
I would, at the risk of not sounding Nebraska not nice, is any engineer that is not using AI to write code, I would fire them. I know, not very Nebraska nice.
There are very few instances where I would say you wouldn't want to use it, that's for sure. But yeah, so a lot of the success that we can have with it is truly because of the engineering discipline that we have. We can still look at the things that we produce and know that it actually lives up to our quality standards because, we've actually built tooling and harnesses and all the piece parts that let us know that what we're creating actually lives up to those standards. And so that's been a huge game changer for us, and it's actually back to the unfair advantage for Nebraska partners that we have. We can build a lot of really cool stuff that still lives up to enterprise standards really, really fast now, which is amazing and benefits them immensely. The reason I grabbed my phone so rudely is I had to pull out a message that I got from an entrepreneur who actually built a piece of software in the really compelling world of parks and rec planning. Holy magic sorcery, I just tested out the AI milestone generation. And this is just one example of where we've worked AI into a product where it was a little bit surprising for the partner that we were working with. He hadn't imagined we'd be able to do something, putting AI into a product. So it's permeated everywhere. And what was the name of your AI?
It's Sky.
Sky. Well, let's introduce Sky to Alden.
Nice.
And then Brian Zimmer, my business partner, is up here in the corner. He's probably working with Eddie right now. Eddie and Alden actually exchange messages back and forth all the time. It's really cute.
Maybe just to zoom it out a notch, 100% aligned with everything you all just said on engineering. That is happening across every single aspect of the way our business operates. And this is truly the largest transformation that has happened in my lifetime. And reimagining the way work is happening inside of our business while we are also reimagining the way our product is going to show up for our customers is a crazy, super fun, awesome challenge. Because what Bill was just mentioning about engineers not being hands-on keyboard, it's just a fundamental shift in the patterns that people are going to expect in the future. And so something that we talk about quite often is this transformation that's happening in AI. We're all running a new race now, and we're all getting there at the same exact time. If I was in an entrepreneurial role again, that would be such an exciting place to be because you can pull out ahead of a big scaled company. Big scaled companies still have places. You are getting to the starting line with more tools than a lot of people have, and we're all running this race together, but it also means that we all get to apply a lot of creativity to create the future together, which I think is really, really exciting.
I love it. Shafiq, Marble was kind of built with AI intentionally ingrained in the idea of the product itself, right?
Right. Yeah. I mean, as a consumer of AI, we, just like everybody else, we're highly efficient there. As a producer of that technology, especially, in the realm of hardware, some people call it physical AI, industrial AI, but we're just starting to scratch the surface of what's capable out there. I mean, today you go look at the videos out there, and you'll see humanoids folding a T-shirt or doing some of that stuff, and it's all slow. But that's changing pretty quick. I mean, I think you guys will be back here in a year or two, and we'll be able to show you demonstrations of really not humanoids. That's not the form factor we built. We don't think they're great for meat processing plants, but a highly specialized machine doing pretty dexterous, cutting tasks, which is relative to folding a T-shirt. It's pretty mind-boggling.
So if for any of the congressman's staff, if you just want to flag for him, I'm moving into Q&A with the audience here, just so he can have the final word today. And ladies and gentlemen, you got a panel of experts. Let's give them some really hard questions to end the day with. Who's got one? I see a hand in the back. Is that Dawson? That's Dawson.
Hey everyone, Dawson Brunswick, Columbus Chamber. More of a state level question for the four of you being in business in Nebraska. So Nebraska is competing every day with 49 other states, 190 other countries. Why do you guys continue to choose Nebraska, and what would you say is the most meaningful investment the state can make to keep you here and help grow that next round of innovators and keep growing the state?
I think I would double down on what I said before on just the work ethic here, and that's not just in the talent that we're able to attract, it's in the whole business community and how it supports Hudl and our continued growth. The biggest challenge that we face right now is not a talent exodus, but we are actually at a point of scale where we need to bring specialized talent into the organization, and that isn't something that we have developed here. The reality is there aren't a lot of scaled technology companies, so when I need to go source a global SaaS revenue operations leader to help us reinvent our sales processes, I have to look to the coast for those talents or internationally. I wish we had a few more hooks to get those people to come live here instead. I would much rather have them in our headquarters. That has been a pretty hard sell for us so far.
Dawson, just because you may end up in a group of people that has some influence over this at DED, look, the best way to create more hooks for people to come here is have more companies for them and trailing spouses
Absolutely.
to work at.
Yes.
Please take that back to the body when you have a chance. I'm sorry, other panelists want to comment on this.
My read on this is, I understand that we have to tighten our belts from time to time, but my concern is that in the midst of tightening our belts right now, we may have lost some of the seriousness that we were thinking about when it comes to economic development, and I think that's been a real headwind that we faced over the last couple of years. I hope that we can kind of reverse that and start to take economic development seriously, and I think that'll help a bunch.
Proximity to our customers, obviously, this is a big one, for us. I think we stretch the dollar here probably 3 or 4 times further than probably, if we were building this, like I said, in Cambridge, Massachusetts. So that's a big deal, especially early on. I think, like I said, I think you can build $1 billion company with less than 100 people. You do need specialized people early on or as you scale. The question becomes, how do you attract them? If you have them here, how do you keep them here? If not, how do you attract them to be here? I think it's a solvable problem. I think, what are companies? It's people and money. That's really what it is. Money is a commodity. People, that's where it gets really hard. I think it just, how do you enable, the University of Nebraska to continue to attract great talent? And we're starting to see that. Our latest 3 or 4 hires on the machine learning side came to us from the University of Nebraska, which is a really, really big deal. And then, again, as you scale, if you need professionals, how do you get them here? I think the best time to capture people and when they're going through a big change in their life, when they're big, when they're picking a university, when they're ready to buy a home, when they're getting ready to have children, and I think we got a value proposition there.
I think another thing to add to this is that I think a lot more people need to know about the existing benefits. So, as some of you know, Congressman Flood, when he was a state senator, with the digital asset bill that Paul here is building a business on, and having more companies come in and take advantage of things like this. Another thing that people don't know is some of the actual tax benefits that do exist. So if you start a company in Nebraska and then you register it, from a state income tax perspective, the first $10 million of sales of stock is tax-free. I don't think a lot of people know that. And so there's a lot of benefits of already being here that need to be communicated.
Awesome. That is a great note to end on. Everybody, let's thank our panel for their time today. And Congressman, we yield back.
Thank you very much. Thank you, Jason. This brings us to the conclusion. I wanted to thank a couple folks, most notably Dr. Gold, University of Nebraska, for hosting this here. This is all done by my congressional office. I want to thank them, especially Kurt Bliamptis, who is on baby watch with his wife. I know he's watching on YouTube right now. And I just want to say Nebraska is a great place to do business. Let's adjourn to have some, enjoy our reception afterwards. There's a cash bar. The House of Representatives is not going to pay for liquor, which is probably a good thing ethically, but you can pay for it, and we bought some hors d'oeuvres, and we're happy to have you. Thanks for coming.